Hello? Hello? Mic check? Welcome everyone back into Crypto's News. It's me, Omar Bam, aka Crypto. Real pleasure to be back with you guys. We're going to be covering what's going on as we start another fantastic week in crypto land as we move to the future of money. So it is a little bit of a negative when we're talking about the crypto prices. As you can see from the title there, let's just dive right into it. You can see Bitcoin is down 4.2%, letting up down below 23,000 at $22,789. You have Ethereum down also 5.1% at 1,559. EIP 1559. Nature has healed. What's up, Envy? Thank you so much for joining me. Anyone else who comes in here live and is watching in the background, I really appreciate it. Invitation to hit that like button if you do enjoy this kind of content so the algorithm feeds you more of it. Subscribe also. That'll be a big help for you. And big thank you also to Michael Devon. Thanks for the honorarium. He's been tipping me consistently. Even when I wasn't making videos, I was like, damn, Michael's tipping me. So I guess I have to go back to making videos. But thank you so much for that, sincerely, and everyone else who supports so many other ways. So that's pretty much what we got with the prices. What's going on has to do with the Federal Reserve. They have their big meeting coming up on Wednesday for the month. We've been talking about that quite a bit, the anticipation surrounding that. There's still the chance that they're going to be raising rates, but only 25 basis points versus 50, which would be a little bit more dovish, I suppose. That is a 98% chance down from 99% chance that we had previously seen. Adam Cochran had some reason to taper some of the bullishness that we've been feeling, of course, because it does feel like maybe the Federal Reserve could be coming out here when they have their big meeting and throwing water on the flames because they don't necessarily want the markets to be climbing so much, especially if they're going to be reversing course. So this is what he had to say. This is a common pattern with this rally. Bearish pre-market, bullish after 9:30 a.m. That tells you a lot about who is driving this rally. Sophisticated at-scale investors have access to pre-markets and futures. So what does this leave? It leaves retail investors and quant buying for ETFs, quant funds that can only settle the actual asset rather than the future. Thin markets have flipped bullish from retail investors and ETFs, seeing a diagonal trend break. That kicked off a bull market rally against an oversold market. With markets thin and low volume, it didn't take a lot to move price and get shorts offside, and a covering rally added fuel to the fire. But investment banks' year-end targets don't align with the current trend, and so seeing this distinct separation of buying groups gives remarkable insight into the current run. There is a disconnect between the charts and the economic cliff of tightening. It's estimated that 78% of all stock trading is algorithm, automated ETFs, or robotic these days, something we didn't have at scale last financial crisis. Part of why we call this the decade of passive investment. These algos are trained on a 15-year period of low rates with no data on quantitative tightening. If the trend bucks, they long. Retail investors who got heavily into the market in the last 5 years are ultimately trained on the same. Buy the dip. It's the same mentality with retail and the same mentality with these bots. Their short-term focus doesn't account for the long and variable lags of a tightening economy. We expect that to take 12 to 18 months to work through the economy when we hike. That means we're only at peak impact of the first hike come spring. So potentially the first rate hike that the Federal Reserve did from the lows that we were at of near zero won't really come into effect until perhaps spring. And then from that point, we could really see a little bit more slowdown in the economic numbers. It'll be harder to cover up some of this kind of information, and potentially the looming recession could prove impossible to deny. The easing of financial conditions just prolong the fight between passive investors and the Fed. Robots don't know the concept of don't fight the Fed, but there is a reason that Wall Street is wary. So we have had a lot of good times, but potentially, I mean, recently to start off the year, potentially that could be reversing course. Looking at what's going on here with Adam Cochran, especially if the stock market does correlate to crypto, there could be potentially another leg down. This is also illustrated here by Morgan Stanley's Mike Wilson, who has put out a report warning that the rally we've been seeing in January could be coming into an end. It was driven by this January effect whereby if you have investments that have not done very well, you sell those investments at the end of the year in order to offset your gains from your positions that have done well, and any capital gains you would have to pay on those. With the losses, you basically get to tax loss harvest in that sort of way. Then in the beginning of the year afterwards, what you do is you buy up those assets that you sold at the end of the year again and take those positions. That could have been part of what drove the rally. And there's also this effect of the January barometer that could actually be quite good, but I'll look at that in just a moment. But what he's saying is that there is this cardinal rule of don't fight the Fed. The Fed is hiking. They want to see things like equities drop, risk assets drop. They want to see unemployment go up. They want to cool the flames of a hot economy based on the metrics that they look at. Money velocity, they want to slow down. They want to see things like job growth slow down. And this would potentially open up the door to stopping the rate hikes and reversing them, which is, I think, what the crypto market and the stock markets have tried to get a little bit ahead of right now, of them having, or them eventually tightening, reversing the tightening that they are doing. But we might have gotten a little bit of our head of ourselves a bit too much, and the Federal Reserve will want to temper our expectations, and this could be something that could, on Wednesday, since it's the beginning of the year, they would like to set the tone for the rest of the year, could potentially lead to markets coming down. Maybe they will say that they do plan to hike more aggressively than they did, or maybe they'll say that, I don't know, very, very unlikely, but they'll be raising it back to 50 basis point hikes or something. But this would be some sort of tailwind for the markets that could drive it lower. But for now, ahead of their meeting, that's why you're seeing Bitcoin prices go down and things like cryptocurrencies go down. If it plays out like it has recently, what could happen really is that the Federal Reserve comes out. They really don't want to scare the markets too much. And this sell-off that we see recently actually does a reverse and pumps higher. But because of some of the bullishness that we've been having recently, it could pump substantially higher, take out the shorts, then drop back down and liquidate even the long positions that opened up. So I think this is a very risky time to be trading on leverage and to be trading on high leverage anyway, because really anything could happen here. I think the potential really is for it to continue to go up despite whatever drawdown that we have. I think we have done our bear market lows. That's really what I personally feel. And it would be great to see some sort of pullback here so that this rally can be a bit more sustainable. And I think that's what would make more investors feel comfortable here as far as the more short, medium term trading that's going on here. But the long term, I think that the direction for cryptos is up. But as I've said before, it's not going to be a straight up elevator. And we have to keep in mind this effect that is talked about apparently of the here on Market Watch. They had written about it a little while ago, this January barometer that would be quite good because we have had a phenomenal January. And it turns out that according to, where is it right here, to the Stock Traders Almanac, there is data showing that there is this barometer that has only registered 12 errors since 1950 for an 83.3% accuracy ratio, whereby the trend that starts off in the first month of the year tends to continue for most of the year. So since it's been a green month, that would mean that it's basically going to be a green year. Again, about 83.3% of the time since 1950, it has been correct. So it would be a good year for crypto and other markets as well. So we do have to keep that in mind. Let me know as far as whether you're feeling bullish going into Wednesday or bearish. Do you think it's going to have no effect? I would love to know down in the comments below. What's going on, everybody? Oh, thank you so much, Bit Warrior. Got a donation from Bit Warrior. You're the man, Bit Warrior. Thanks for sticking around the show, man, through all the years. I really appreciate you, and seeing names like yours who have been here through thick and thin means a lot, man. Appreciate that. Thanks for showing up for the like button, Gortrabot, New Tribes. Greetings, Wendell, Pothead. I just caught you guys right now, so I had to say hello. So Elon Musk is pushing forward with a vision that he has for Twitter payments. He expects is going to be bringing in a lot of money for Twitter over the years. By 2028, he thinks a platform where Twitter has like an all-in-one solution, including payments, users sending money to each other, not just tipping influencers and so on, but a bigger scale for this. That this by 2028 could bring in $1.3 billion in revenue for Twitter. Twitter has been having all sorts of issues because you have had concerns around content moderation, leading to more and more of the marketers who have advertised on Twitter bringing down their spending on Twitter since Elon Musk has become the head of it. It was previously, it says here, $5 billion a year advertising business, but it has cratered according to FT.com. But they don't let us know exactly what it's cratered to, and I haven't pulled it up myself, but I imagine it's come down, I guess, substantially, and that's something I have heard. So how do you make some money on something that you spend $44 billion on? You have to come up with solutions. It looks like the company has been applying for state licenses to create this payment platform. Eventually, after they get all these different licenses within the next year, they hope to open this up internationally as well. And it's going to first start off with fiat. So fiat payments, imagine like a Cash App, Venmo sort of thing, or PayPal, with which Elon Musk actually founded this one of the first online banks called X.com, which eventually became a part of PayPal. It would be something similar to like PayPal right within Twitter itself, since it turns out that a lot of users share links to have links to other payments, payment applications from right within Twitter. So it's kind of no brains for them to implement some sort of payment solution. So this is something that's going to be coming forward, going to start off with fiat, as I mentioned, eventually move over to crypto, Bitcoin, potentially Dogecoin even. I would imagine they would do something like that as well. Wallace, we're live right now. You're going to have to keep it down, man. Keep it down, please. Thank you, young man. And so yeah, I mean, more utility for cryptocurrencies, more utilities for spending, I think is really good. They're also setting up some sort of vault that will store user data. It turns out, and secure it. I don't like the idea of my data being stored, but we know that's how it works with social media platforms. But it does show that Twitter is kind of trying to move towards something more like Facebook, where they have so many different kinds of applications, including payments, natively from within it to evolve the platform itself. Yeah, I think personally for me, I've been it's been interesting to watch Twitter evolve over the years. I think there have been some changes that I've not agreed with for the most part since I've come on to Twitter. Like I remember the short character limit, like being able to tweet a really long paragraphs and so on, has increasing that for me has been a problem, because I like the ability to practice grammar and being more concise with my ideas. And now I don't really get the opportunity to do that much on Twitter, since you can write so much more per tweet. And that's going to be opening up even more, I believe, if you're a Twitter Blue subscriber, something else that I'm not a huge fan of. But let me know, what do you guys think about Twitter? Is it good or bad? But yeah, all of this information is apparently leaked, so it's not super confirmed from the company itself, but it's been leaked from sources inside Twitter. And it looks like this as Heather Crawford is going to be leading the charge and building this out, has already started to do that and set up the architecture for all of this payments. So this is circulating right now. These are emails that were sent from Sam Bankman-Fried. The first one here is to a witness with all of these lawsuits from Department of Justice, trying to get justice against Sam Bankman-Fried for defrauding investors when it came to FTX, maybe being in bed with Alameda Research, so much more going on here that I can't possibly recount the story of the fall from grace from this guy who came out of nowhere to become the face of the suits of crypto anyway. Trusted by so many. But yeah, it looks like he is out there and has been since being released from jail. and brought to the United States has been emailing different individuals. Here's one witness, one that are being called here. We don't know the exact name, but he wrote, reconnecting to them, and that's the subject line. He wrote, "Hey, I know it's been a while since we talked, and I know things have ended up on the wrong foot. I'd really love to reconnect and see if there's a way for us to have a constructive relationship, use each other as resources when possible, or at least vet things with each other. I'd love to get on a phone call sometime soon and chat." Kind of odd, right? Writing to a witness here and trying to rekindle some sort of friendship, trying to assuage doubts, trying to, I don't know what's going on here, but a lot of folks are taking a look at this line here and pointing at it and thinking it's such a joke of a thing to say. Use each other as resources when possible. He only views other folks and relationships as resources and not some value in and of itself, but just something to be used, utilitarian-like individuals. Besides the witness one, this has also surfaced. He wrote in an email here dated January 2nd to John Ray III, who's the new CEO of FTX, leading up bankruptcy for the company. So there's been a lot of hostility in a way, like passive aggressiveness from Sam Bankman-Fried toward John Ray. And interestingly, he had written this to John Ray on January 2nd. "Hi, Mr. Ray. I know things haven't gotten off on the right foot, but I really do want to be helpful, whether on the funds or anything else. Hopefully it's just you guys moving the funds." So there was like a random night I had covered it here when funds just started being moved out of FTX and linked to Alameda. It was just wild. Like, who was doing that moving? Hopefully it's just you guys moving the funds. As I'm guessing you've heard, I'm in NYC for the next day. I'd love to meet up while I'm here, even if just to say hi. In case you're available, I'm free before noon Eastern, or from roughly 4 p.m. to 6 p.m. tomorrow, Tuesday, in the city. Sam. Anyway, this has resulted in the Department of Justice, according to The Block, in an article titled "Bankman-Fried Sought Constructive Relationship with Criminal Case Witness." It turns out the Justice Department wants to amend the conditions of Bankman-Fried's bail to restrict his access to encrypted messaging services and bar him from communicating with former employees of FTX and Alameda Research, suggesting he tried to influence the witnesses in this case. I think it does make sense that he shouldn't be able to reach out to witnesses and influence them in some sort of way. He apparently has had quite the silver tongue. Some are accusing Sam Bankman-Fried of thinking that he can operate outside of the rules, but it looks like he's not able to get away with much because the witness leaked this email. John Ray leaked this email. So it seems that they're not very keen on starting some sort of relationship or having some sort of undercover relationship with him. I would probably stay away myself. But interesting that he thinks he can still get away with this. And who knows, maybe he has gotten away with it with others, but seemingly not with John Ray or witness one, whoever that may be. Surely he's reaching out to others as well. In Nigeria today, it's being shared that there is a huge Bitcoin premium. So if you're someone who likes to take advantage of arbitrage opportunities, this could be a really advantageous one where you could buy Bitcoin cheap, sell it more expensive on this exchange if you're able to get access to it in Nigeria, because the premium there was over 60% at one point. This is due to Central Bank of Nigeria's efforts to limit cash withdrawals and all sorts of rules around withdrawals with the Naira currency, which has had all sorts of problems of itself. So they've introduced a new currency, and they've had people have to go to financial institutions to change old money for the new money. But apparently the queues are so long, like you've seen in India happen in the past. Central banks don't really learn much from history or from each other. They just repeat the same crap, which will ultimately end in tears, but whatever. Anyway, they've had to extend the deadline for the changing of their old currency for the new currency. They've employed strict controls on the amount of money that can be withdrawn from ATMs. They've placed fees on OTC transactions and withdrawals of 5% for individuals and 10% for businesses over a certain amount here. But yeah, this is driving more and more people to better money, to Bitcoin. No surprise there, but that's what's led to this buying of Bitcoin and a higher premium there on this Naira X exchange. And to prove that to you, where it's actually at right now, since that article came out there on Cointelegraph, it's actually quite high still. So as we went live with this video, you can see the price for Bitcoin up there in Naira currency. I don't know if you can sign up yourself. I haven't tried myself, but likely you might have to have some sort of citizenship there. I'd imagine at the exchange. But if somehow you do have access to it, and Nigeria is one of the biggest markets for cryptocurrency, then this could be advantageous to you again if you can get Bitcoin cheaper somewhere else. But yeah, you can see right now it's at this price right now. When you go ahead and do your math for Naira versus the US dollar anyway, it turns out that it's not $38,000. Currently, it's come down a bit since this news is leaking, but still you can sell Bitcoin there for $37,810 per Bitcoin. So still quite elevated from the current prices that you see for Bitcoin, which is insane. I imagine that's going to change rather quickly, but it hasn't changed quickly since I started researching for this video. Anyway, the flood into Bitcoin, love to see it. The flood into cryptocurrencies, love to see it. Every mistake that the central banks make is you're going to have Bitcoin there to catch up for it, to catch folks for it, to catch users for it. Anyway, I love all of you. Thank you so much for joining me. We will wrap up this video here. I don't want to make them too long. I would like to ideally continue to make them shorter and more concise and available to you guys. We'll finish with our quote of the day here, which is by Unknown. Every day may not be good, but there is something good in every day. Take care, everyone. Much love. Have a fantastic day or evening, depending where you're at and when you're watching this video, and stay cryptic. Peace.